Good morning, everybody. Hope everyone's doing wonderfully well as we get started here on this game plan. It is that beautiful Wednesday morning that we all look forward to midway through the week. And my name, Gareth Soloway, here at verifiedinvesting.com. We have a lot to go over today, folks. You can see the studio looking a little different. I'm doing it from a little side studio. We're having some technical difficulties. Plus, don't forget, next week for 3 weeks, I'll be out of the studio on vacation, but still bringing you the live game plan, trading the close, and everything else here from verifiedinvesting.com. All right, so Google earnings coming out. Now, Google earnings were pretty solid. The problem with Google was that we saw essentially YouTube revenues come in lighter than expected, and that's the crown jewel of Google. In addition, in the conference call, we didn't hear a lot about AI. That was exciting. It was kind of the normalness. AI almost becoming kind of an afterthought at this point, as it's not the new exciting thing anymore, and there's been no major additional advancements. So Google yesterday after hours, or I should call it Alphabet, that's the parent company, we did see initially kind of a flush, then a pop, and now it's down pretty significantly. Last I checked, down over 4% for a multi-trillion-dollar company. That is a big move. Now, Tesla. Monster move over the last 3 months since the last earnings. Stock was up almost 100%, but this is the issue. Their car business is not doing great. Again, half of their total profit was generated by selling credits to other automakers that essentially needed credits because they weren't as energy efficient as Tesla is, having all EVs. And so that was half of it. In addition, their revenue, their earnings numbers came in light. Everyone was kind of keeping the stock in check. If you looked at after hours action from trading the close yesterday, what we saw was Google, or I should say Tesla, was just down slightly. But in the conference call, we saw Elon Musk not really giving any sort of exciting news on robo-taxis or anything else. And once that didn't happen, the floodgates opened to the downside. Margins for cars were down more than expected as well. We know the EVs have not been doing as well. So when all is said and done, I do want to get into the charts today. So let's go right into it. This is the QQQ NASDAQ 100 on the intraday, and this is the pre-market action. This is where we closed yesterday. This is where we are currently trading. So the NASDAQ 100 closed yesterday at around 480.60, so $480.60. It's trading down at 473.77. That is a big move to the downside. If we look at the S&P 500, same thing. Big down move this morning after a close yesterday at around 553.70. It's trading down here at around 548.70. That is, again, a big move down on the S&P 500. So it looks pretty nasty this morning. Again, the big drivers, if we look at Tesla here, take a look at Tesla here. If we look at the daily chart, the stock was consolidating here above this key level. Now, again, I want to erase some of these other levels so we can kind of get this into a clear picture. But we had this bigger wedge pattern, the wedge pattern going all the way back to March of 2020, and obviously the all-time high here in November of 2021. Look at how, again, it ran up, pulled back, hit, came back down, hit the lower end, bounced to the higher end, hit it again, came to the lower end. Here we got a breakout. Now, again, for bulls, that's what you want to see. You want to see a price breakout. The problem is that it was such a massive move in a business that otherwise is seeing shrinking margins that it put them at a really tough advantage for keeping that amount of gain in the charts. And so what do we see today? We're seeing a drop, but look at where we're trading. See this trend line right here, guys? See this trend line if I extend it out? Look at this pivot high right there. We are trading right back to this level, and this will be a pivotal level for the day. If we go to the intraday chart, see here, right here. So this is that same level we were just looking at. This trend line is the same trend line that we were just looking at on the daily chart. And if we flip back, it shows us right into this pivotal level. So where does Tesla close today? Can it hold above 225 on a closing basis? If it can, it breeds potential positivity here for the overall chart or the stock. If it closes below, start getting a little bit more nervous. We could be headed to some of these lower levels. Big gap fill at 210, pivot high right here at 205, and at 200 even number, a major level as well right here. Looking at Google, let's flip over to Google. This is a very interesting chart. So notice this trend line. So first of all, look at this trend line right here. Very kind of key high pivot going right there. And again, if we extend it out, look at this move here. But the more important thing that I'm focusing in on is this trend line. From the pivot low in March to this pivot low in April, look at how price broke through. It confirmed. It did a classic retrace to the scene of the crime. And what do we expect? And you guys listen, even if you aren't a member at Verified Investing, if you're just someone watching, you've learned this, or at least you should have learned this. It's a retrace to the scene of the crime, which is now resistance. This was support. It broke and confirmed, retraced. What should be the outcome? Based on technical analysis, we should sell off. Based on that, again, break key support. It now becomes resistance. Once you confirm, retrace to the scene of the crime, boom, to the downside. If we flip over to the intraday 10-minute pre-market chart, you have Google trading just above 174. A big drop there for Google, about 4%. And 4% on a multi-trillion-dollar company is a big drop, no doubt about it. All right, so again, where is their technical support today on this chart? So basically what we do is we flip back to the daily chart and we start isolating down. One of the things I do here is I use my fibs. And again, I have some fibs in here. I started at 382. Notice the 382 is close to this pivot point right here. All right, so this to me, right in here, you can see this little area right here. This might be an opportunity right around 169 to 168. So if we were to flush into that level today, it's still a big move, but there might be an opportunity for a day trade technical bounce. Now, would I swing trade that there? Heck no. When you look at this chart, you can't be thinking, hey, let it pull back 5% and let me swing trade. I mean, you got to be looking for like 10, 20, 30%, in my opinion. In fact, I would start to get interested at this previous high. So what you see is charts can break out, just like we saw here, a breakdown and a retrace to the scene of the crime. What you can look for is a breakout above this line here. So, right, so if you look at this, right, here it hit right here, then we came down, then we hit it here, pulled back, and finally broke out, and off we went to the races. So as a technician on a swing trade basis, in general, I'm looking for a retrace to the scene of the crime in that specific sense to get me on the long side of that chart. All right, so again, you guys see what I'm kind of getting at there in terms of that setup. Okay, so those are just a couple names that I wanted to go over here in the pre-market as markets are taking a beating. If we look at NVIDIA, I've talked about this quite a bit. We had a key trend line here. We broke below it, consolidation in a bear flag. We didn't get back to the scene of the crime, but you're bear flagging here, which denotes that either you get back to the scene of the crime and then sell, or you sell even before that. Right now, if we look at pre-market, NVIDIA is down pretty sharply, trading around 119.50 on the day. So we are seeing some weakness in the semiconductors, even though Texas Instruments is slightly higher on earnings and Seagate Technologies is also higher. But again, one of the things I pointed out to members in Smart Money Stocks and ETFs was that if you looked at this chart on Seagate going into earnings, you weren't even at the 2021 highs, right? So think about it, right? So this is a chip stock. And we know that NVIDIA and all these other chips have made massive moves from the highs just in 2021. So are we super surprised that this might be one that's playing a little catch up, that maybe valuation could actually go up a little bit? And by the way, I still don't think it's getting through double top up here at 118, but it just makes more sense to me, at least, that we could be in order for a little bit of upside versus some of these charts that if we go back to NVIDIA, I mean, look at the 2021 highs on NVIDIA, folks, all the way back here. Look at that comparatively, right? Major differences on the charts. All right. So Seagate, Texas Instruments, both up, but the bigger semiconductor players are taking a beating. Micron, AMD, both down today nicely. NVIDIA down today. SMCI. And by the way, on SMCI, here's your wedge channel pattern, and we've broken down. So this is a big breakdown here. I've shown you guys this before, but don't forget, we have that head and shoulders pattern from over here, and that should play out to a target of approximately $500 a share. So we've already broken it right here. It broke down, but it hasn't reached target. Now, to calculate your target on a head and shoulder pattern, once it breaks, which it did right here, and then it started to bear flag consolidate within a channel, you take the highest point of your head, you drop a plumb line down, and whatever to the neckline, this is called the neckline right here, you take that distance, which is 400 points, and from the break point of the head and shoulder, which was right here, you drop 400 points. And essentially, if you do that, what do you get? You get about $512, give or take. So right in that $500 level, that should be ultimately where we are going to see SMCI coming down to. So there's still a decent amount of downside on this stock before we finally get into that level. All right, so just wanted to point that out to you guys there on the chart. That's classic technical analysis. Again, just one more thing that I teach in this in the Winning Trader series that is currently on sale for the last time ever here till the end of the month. Okay, a couple other things to go over here pre-market. We did get some earnings out here from AT&T. AT&T, last I checked, was up a little bit on earnings. And again, you can see that stock getting a little bit of a bid and then just chopping sideways in the pre-market. If we look at this bigger chart, look at this, right? Look at how low this is to where it used to trade. So it's way down. Granted, it's not as sexy of a company as it used to be when phones were all the rage and the excitement of it was back in, I guess the 2000s to 2010 range. But either way, stock is trading up just a little bit. Remember, Verizon just came out and reported earnings that were bad. And so AT&T, and here's the drop on Verizon, AT&T fell on that same report. So again, they were already factoring in kind of weaker earnings. And then you get a slightly better report and it's able to bounce back just a little bit. All right, other stocks reporting this morning, Next Era Energy and NEE. This stock, if we go to the intraday, is flattish on the morning session. Not much price action there. VRT, which is a data center play, initially rallied, but then came in down slightly on the morning session. No tradable levels on this one. There's just not enough volatility. But look at the run that this thing had. Was consolidating, but again, it's still so overbought on the scheme of things. Anything data center related, AI chip related, generally has had such a massive move. GD, General Dynamics, which is kind of an aviation play. Look at the drop on this one here. After closing yesterday at around 295, trading at around 285. It's not a huge move, about 3% to the downside here. And then just some other ones that aren't really making moves. Tenet Healthcare is up a little bit last I checked. Thermo Fisher, Boston Scientific, these are other names there. All right, next up, let's get into Bitcoin. Bitcoin is a very interesting play here for me. It is bouncing a little bit after we did see a small drop yesterday. Now, one of the things that I am focusing in on here on this chart of Bitcoin, and I'm going to flip back to me so you guys can see me for just 1 second, is that what we know is that Bitcoin bottomed when the mega cap tech stocks topped, right? Literally to the day that Microsoft made its last all-time high was the same day that on July 5th, Bitcoin dropped and made its low before this latest rally. And so what we know is that generally when people are taking profits from the mega caps, some of that money is going into names like Bitcoin, some of the other coins as well. The big question I have, and this is my one sticking point, and I'm watching very closely, is that once it's a sell the mega caps because of fear, not as much because of profit taking. So fear, like Tesla, like Google earnings, right? These type of things versus just normal profit taking. Does Bitcoin still catch a bid? That is going to be very telling for us as crypto investors. So if we flip back to the chart, we are upticking a little bit today, but let's watch to see how does Bitcoin react today when we open with the NASDAQ sharply lower and mega cap tech selling sharply? Does it continue to rally as those big cap stocks sell off, or do we see it come back in and start to sell? And the reason why this is so important is that you really want to start to figure out, has Bitcoin matured into a safe haven asset, or at least more of a safe haven asset? And if it does continue to go up when the mega caps sell, then you could absolutely argue that it is now more of a digital gold in a way, maybe obviously a little bit more volatile than gold, but maybe more of that kind of angle versus what it has been, which has been a risk on, risk off trade. All right. One of the levels I'm watching on Bitcoin is right here at around 63,500. This is a pivot point. Notice how you came down here, you bounced, it was rejected, and then it fell into the lows. It came up here, pushed through, it came back, tested, and then went higher. This is what we call a pivot point in trading. As long as price stays above this line, generally angle should be bullish. You should kind of maintain and say, okay, even a pullback here, we could shoot up to this $69,000, $70,000, $71,000 level. If we start trading below this, like daily closes, I'm not talking about an intraday Pierce, daily closes below this level, then it is vulnerable for a move back down to this trend line right down here at around 56 to 56,500, followed by this level down here. All right, so really something that we're watching closely today, this pivot line. I'm a big believer that if we do get through 70,000 on the upside, I do think we test the all-time highs and ultimately break those all-time highs. It's just a matter of, can we get through this level up here? All right, looking at Ethereum real quick here, guys. We have this little bit of a channel developing right here on Ethereum. The ETFs did launch yesterday. Generally, they did okay. I mean, they're not Bitcoin ETFs, obviously, so they're not seeing the money flow that the Bitcoin ETFs did. But either way, generally watch for this. As long as we don't have a daily close below this channel, Ethereum could continue to chop inside, maybe even making an attempt at a breakout to a target of 3,900. But if we trade below, a daily close below about 3,440, you should drop to about 3,300 and maybe even start to fall lower than that. So watch that very closely on the chart of Ethereum. Looking at gold real quick here, gold getting a little bit of a bounce today. The big thing for me is the PCE data, which is due on Friday, right? So we have this major economic inflation data on Friday. Are we getting a bounce, which is forming a bear flag? Essentially, are we creating some sort of drop inside bar action that will lead to a drop into technical support on gold on that PCE data? Or are we going to reverse and buy that data? Can we be trading above $2,435? If we do, then you have a potential for a move back to the all-time highs and a move higher. But right now, this is a pattern that I'm watching develop. I'm going to watch all the way into Thursday afternoon and Friday morning before the PCE data is announced at 8:30 a.m. And we'll watch to see what happens. Right now, I'm favoring a move, one more move down into this level to test this major multi-factor trend line of support. Silver also getting a small bounce. Notice again on silver, here's your key trend line. It kind of hit right here, was resistance, rejected, broke out, confirmed. Then you get in this channel, down sloping channel. This level still becomes support. We bounced off of it. We broke out of the channel. Now we've retraced into the upper range of the channel and that trend line again. As long as this trend line holds, this is what I would refer to as a pivot point as well. Very clear pivot point. As long as silver is above, a bias, a short-term bullish bias should be had. If we start trading below this on daily closes, you're likely headed down here, down sloping channel. We can extend it out here. And also this trend line, this would generally be our target zone down here. Okay. All right. So on that note, again, silver, a little silver analysis. Let's now go to US oil. And US oil, guys, here is still stalling out. Now, again, this was that big level of resistance. Remember, high pivot to high pivot gave us this trend line, low pivot to low pivot to low pivot. And then notice how it broke, retraced into resistance, pulled back, kissed, pulled back, kissed, and then fell, and then got the big bounce to X marks the spot. This is that level there that you want to pay attention to. So again, really important level right here. That was the level that I shorted with commodities members as well as stock and ETF members. We've now rolled over. Small support here, small support here. This is your ultimate target here at $73.50 to $74 per barrel. That will be a bigger support level. Now, eventually, do I think this is going to break? Yes, I do. I do think that the macro economy is eventually going to let us break 74, and we'll probably trade into the 60s, even the 50s. But in the short term, in terms of trading, this would be your bogey level, your target zone right here. All right, so keep an eye on that. Natural gas, let's go to natural gas real quick. Natural gas had a little bit of a bigger drop early today, but it's starting to bounce back. Major technical support remains around 205. I still think there's a decent chance we could trade back to what we call the middle of the M pattern as the A pattern forms. Generally a move back here to the midpoint and then your next leg to the downside. So again, that's generally how this pattern completes. Doesn't mean it has to. The A could be much smaller. Heck, for all I know, maybe the A is already completed, but that would be somewhat unusual in terms of the A pattern. After such a big sell-off, you usually get a bigger move to the upside. All right, couple other charts I want to show you guys. Let's look at copper real quick. Copper has fallen here pretty precipitously. I want to show you my key levels here. So number one, what we can see here on copper is that we are finally into some support levels. Copper had this incredible run to the upside, topped out at around $5.17. It then pulled back. Today, officially, we are hitting a 618 Fibonacci retrace of this low here, which was the kind of the lowest point on the cycle of the bull move, to the highest point here. Today, again, this is a 618 Fibonacci. You might get a bounce off of this level if you're an aggressive commodities trader. The bigger levels, though, you have X marks the spot here and an add level here. These are the bigger swing trade zones, $4 Pierce and 380 Pierce. These are your really high percentage. This would be more of a quick trade, maybe a bounce back to this 433 level, the midpoint or the low pivot right here before that bigger bounce. All right, so just wanted to go over that chart. I also think another interesting chart is the chart of nickel. Look at the drop on nickel, folks. And nickel is now coming into a very pivotal technical support. But again, folks, by the way, when you're seeing charts like this, like copper and nickel getting crushed, it's not a good thing for the economy. It doesn't tell us that the global economy is expected to do amazingly well or is doing well. And listen, a lot of us already know that, right? We all know that. We know that the struggles are there. Granted, the numbers aren't telling us the U.S. is in recession yet. But ultimately, when you see charts like this on nickel, that is not a good chart. Absolutely horrendous for the economy. Now, on a technical analysis basis, would nickel likely bounce here? Yes, it should bounce here. A good example of this would be the Oats chart here. And you can see I'm going over a bunch of commodities today. But if you look at the Oats chart here, let me go to my other Oats chart here that has more data. There we go. Look at this. Same exact chart. Downsloping trend line, flat bottom. Look at price fell all the way into it, even retest it, and then look at the bounce you're getting. This is the type of bounce I would expect on nickel before maybe further downside if the economy continues to weaken. All right, so that's interesting there. Lastly, I'll throw in Cardano because I know a lot of you guys are big crypto players. Cardano has a lot of resistance right up here. Notice again, this was your former wedge pattern. But what I like about Cardano is after this reversal move, this could be bullish consolidation. So I am watching this chart closely. And again, bullish channel potentially. We just want to see it hold this lower level. You don't want to see it start to really cascade lower. As long as it stays kind of inside of this channel here, around 40 cents or above, this is a very potentially bullish chart for a break to the upside. So again, nice little chart there on the chart of Cardano. All right, lots of stuff, guys. Again, it's actually not bad to do it from this little studio here where I get to kind of control my charts and show you guys things straight up. But either way, folks, there's lots going on. Earnings will continue. Chipotle after the bell today. I didn't get to do the wheel tomorrow today because I'm not in the studio. We'll do it tomorrow within the studio. So we'll give away that. Make sure that you comment and share this all over here because, again, that enters you to win, obviously, to be entered in to win that prize on the prize wheel, the Wheel of Appreciation. And as always, folks, come check out everything we offer here at Verified Investing. To me, the mantra for verified investing, and this is so important, folks. I've seen it for 25 years, how institutions dominate and push around the small investor. And verified investing is giving you the same technical analysis and data analysis that these institutions literally have staffs of 10, 20, 30 people paying millions of dollars to these people for that analysis. And it's all about leveling the playing field. Level the playing field, give you guys that same ability to have probability on your side. Doesn't mean we always win on trades, that's for sure. But ultimately, if you can win more than you don't and you take out emotion, it's all about the success at that point. You remove emotion out of the equation, you actually start to make really intelligent decisions on investing. That's the key, folks, and that's where data and charts come in. All right, on that note, folks, as always, you guys rock. I appreciate you guys so much coming in here and watching today at Verified Investing. I'll talk to you soon. Take care.